Hi there, American Tower Corporation has recently reported the results for the second quarter. Maybe you know that AMT is paying a dividend around 3.3% at the current price, and the stock price has decreased by over 40% from its peak. You can see that the PE ratio is around 91, but the focus is not on their earnings, but on their funds from operations. These are the numbers you should follow. As you can see, the analyst expects the funds from operations to increase from 4.5 billion to over 5 billion by 2027, almost 6 billion. And also the revenue is expected to increase a little from 10 billion to more than 13 billion by 2027. So that's great. Plus, as they are paying a dividend around 3.3%, this dividend is expected to increase more in the future. As you can see, from $5.88 to almost $10 by 2027. That will be a dividend around 5.2% at the current stock price. So now you have 3.3% in dividends, which are expected to increase to 5.2% by 2027. So in the next 5 years, you will have a dividend more than 5%. And of course, an increase in the stock price. As the funds from operations are expected to increase, also the stock price will go up. So you might get a nice return, a nice dividend around 5% plus an increase in the stock price. Maybe you know that AMT or American Tower is a REIT. They have locations all over the world and they rent this piece of land plus this tower. And communication companies are renting their locations to install their antennas. And in this way they make money. So they have good tenants and can expect an increase in their dividends and also in the funds from operations, as internet and 5G is a basic need for us. Now if you look at the second quarter results, you can see that the revenue has increased by 3.6%. Of course the net income has decreased by almost 50%, but you should focus on their funds from operations, where the decline wasn't that high, only by 0.4%. And their CEO says that their customers continue to invest in their networks. They deliver another quarter of 10% dividend per share growth, and as the 5G investment cycle continues, they believe that their assets are well positioned to drive growth and attractive returns over the long term. And their guidance or outlook is that the revenue is expected to increase by almost 4% year over year, around 10 billion, and the funds from operations to be around 4.5 billion, an increase of 0.3%. So in line with what the analyst expects. They expect for 2023 4.5 billion in funds from operations. You can also see their past results, that in 2012 they had 1.2 billion in funds from operations and now they have over 4.5 billion. So they more than doubled their funds in the last 10 years, and that's great. Now the decline for this year happened because of higher interest rates. As you can see, their interest expense has increased from 800 million to over 1.1 billion. As rates went up, also their expenses have increased. And that's why they had a decrease in the funds from operations for the second quarter. Of course, if rates go down, then their interest expense will decrease and their funds from operations will increase. That means the stock price will go up and also their dividend will increase, as the analysts expect. And be aware that the total debt is around 48 billion. They also have some cash and their net debt is around 46 billion. So their net leverage ratio is around 5x. Moreover, dilution is not that high. They had around 400 million shares in 2010 and now they have over 465 million. Of course, you also have to track the number of shares because if they issue too many shares, then your value will decrease over time. Now let's see the fair value of American Tower. First, the risk. For a 10% annual return, the fair value may be around 50 billion. If their growth slows or they face more problems, for instance higher interest rates, then their funds from operations may decrease and also the market cap. So you can expect another decline in the stock price. As you can see, the fair value per share may be around $107 if their growth slows. And the gray scenario, where they may grow by 5% as they expect, the fair value may be around 68 billion for a 10% annual return, or $146 per share. Now, if you are pleased with a lower return, let's say 5% a year, then the stock price may be fairly valued at the current level. So the fair value will be around 84 billion, and now the market cap is around 88 billion. Be aware that these are the analyst estimates. Their numbers may be higher, and also the fair value. So it's up to you what return you want from this investment. In the normal case, where they might grow a little, the fair value will be around 60 billion for a 10% annual return, or $140 per share. So the stock price is still expensive for a 10% annual return. Of course, if you are pleased with 5%, then American Tower may be a good investment. As analysts expect an increase in their dividends, you can expect a dividend around 5% by 2027, and also an increase in the stock price, let's say more than 40%. But if you want more, then you have to find other investments or wait for another decline. American Tower is a stable business, is a REIT, which is paying a nice dividend, and that's why the stock price is so expensive. It's hard to see a major decline in the stock price. Of course, if rates double from the current level, from 5% to 10%, then you can see a decline in the stock price, more than 50%. But if that happens, all the businesses will go down. And if you have any questions, please let me know in the comments.